Welcome to the High Yield Real Estate Investing Podcast, a podcast focusing on multifamily investing in short, easy to digest 5-minute segments.
And I'm Dan with the High Yield Real Estate Investing Podcast.
And I'm Brooke.
Why invest in multifamily real estate versus any other real estate class? If you've been interested in real estate investing and have looked into it extensively, it seems everyone has their opinion on this matter. Now, I'm not going to tell you that multifamily real estate is the best and only way to invest in real estate. I have investments in real estate outside of multifamily myself. However, it does have some very distinct advantages over single-family homes in the retail and office sector. But your investment criteria may be different from mine. If retail and office weren't good investments, there wouldn't be anyone investing in them. For the purposes of this comparison, we'll be comparing multifamily to single-family homes. Let's dive in.
Banks love lending on multifamily, and besides owner-occupied housing, large multifamily properties have super low interest rates. When I look for lenders, it's so easy to find ones interested in multifamily. Everyone from the small local bank to the very large Fannie Mae and Freddie Mac has a program for multifamily lending.
Scalability. How many single-family homes you have to buy to replace your current income? Each time you buy a property, you incur a cost. Title, legal fees, inspection, appraisal, recording fees, etc. Multiply that by the number of single-family homes you need, and those fixed costs add up for each transaction. You could do that in one transaction by buying one apartment building with enough units to replace your current income. Plus, you only need to find and buy one building instead of dozens, if not hundreds.
Multifamily is more passive. A property management firm is absolutely required, which makes the day-to-day operations of the property passive from your end. Most people with single-family rental homes probably used to live in those homes and self-manages them. As soon as a problem or vacancy comes up, you have to take quite a bit of time out of your job or personal life to solve the problem. A difficult and needy tenant or a constantly clogged toilet can drive you nuts and make you regret renting out your old home unless you have a property manager. Then it's all transparent to you. Good property managers are very efficient at handling maintenance requests and finding new tenants. They have specialized software and plenty of local contacts that can do all the usual tasks to keep up a property on the cheap. The less involved in the day-to-day life of your property, the happier you will be. Trust me, you'll mostly be involved in managing the manager.
Value can be controlled or forced more easily. Commercial multifamily is valued by its net operating income multiplied by the cap rate for the market. Anything you do to increase income and or decrease expenses will have a direct effect on the value of your property when it comes time to refinance or sell. How are single-family homes valued? By the price that similar homes sold for in the past few months. You can't control market forces with single-family homes, but you do have the ability to exert a great deal of control over the performance of a multifamily apartment complex.
Taxes. While all real estate presents specific, generous tax advantages, larger properties can afford a cost segregation analysis that offers even more benefit from additional accelerated depreciation benefits uncovered in the study. These cost a few grand plus, depending on the size of the property. A cost segregation study is not practical for the owner of a single-family home or two. The cost of the study alone can wipe out a year or two worth of cash flow. Also, each study is specific to the property. However, all the cash flow from a multifamily apartment complex could conceivably be sheltered with the bonus and accelerated depreciation that would come from a cost segregation study. How would you like to increase your income without paying any tax on it?
Vacancy factor. I won't bore you with elementary math here. If your tenant moves out of your single-family home and it's vacant for 2 months, what's your vacancy factor? Who pays the monthly mortgage? If one tenant moves out of your 10-unit apartment complex and it takes a month to fill, what's your occupancy for the month? Did those other 9 tenants still pay your mortgage, expenses, and put cash in your pocket? Most likely, yes.
Loans. After the 2007 to 2008 recessions, banks capped the number of residential, personally guaranteed mortgages you can have at 10. But many apartment communities benefit from having non-recourse financing if the loan is large enough, such as over $1 million. That means the bank won't come after you or your personal assets if you default on the loan. There's no limit to the number of non-recourse commercial loans you're allowed to have, but if you buy single-family homes and each has its own mortgage, then know that you're capped at 10 properties.
Economies of scale. Oxford Dictionary defines this as a proportionate saving in costs gained by an increased level of production. I'll give you an easy example. Let's say a single-family home grosses $1,000 a month and a 5-plex grosses $5,000. Each have the same size lawn, which costs $40 to mow. What percentage of the monthly rental revenue is the $40 mow for each of our hypothetical properties? It's a lot less with the 5-plex, right? Now expand that concept into a 50 or 100 unit complex and what do you have?
Now, I'm not going to tell you that multifamily beats single-family homes in every aspect. There are some advantages that single-family homes have, but this episode is not long enough to thoroughly cover them in 5 minutes. Head to our website to find out more. Go to highyieldre.com/podcast/MFH.
Thanks for listening. If you want to learn more, go to our website, highyieldre.com. There you'll find a complete list of previous episodes and transcripts. Don't forget to subscribe and get updates on our latest episodes. You can also find us on your favorite podcast service or YouTube, or by emailing info@highyieldre.com.